following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking tune means it's time yet again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com as well as the Options Insider Radio Network. And I encourage all of our listeners while they're listening to the show today to play along and do the home game. Surf on over to theoptionsinsider.com. You can find out more information about all the stories we're going to discuss on the show today, all the unusual activity alerts as well, some of the listener questions, and you can, of course, submit your own questions and comments for the show and for future episodes. So by all means, head on over to theoptionsinsider.com and let us know what you think. And we'll, if your questions or comments are interesting, we might just read them on the air. And of course, joining me on the Option Block All-Star panel today, we have a great group of my co-hosts joining me on the show today, starting off with the man beaming in all the way from the great state of Maine, taking a break from his many lobster meals to join us here on the program today. He is none other than Andrew Giovinazzi, the Rock Lobster himself. Andrew, welcome back to the program, sir.
Yes. I had to wrestle a lobster today, this very day, actually, because it is like 40 degrees in Maine in the middle of January. Global warming, at least for one day, is here, but it'll be 9 degrees in like 3 days, so I guess maybe it's not.
Yeah, you had the weather we had earlier this weekend, actually. We were in the 50s. Yeah. Today we're down to the 24 or so now, which is a little more seasonal.
Kind of a kooky day today in the market, too. Yes, it is seasonal. I'm sorry. I almost made the mistake of talking about the market way too early.
Way too early. We're just getting started. We have to give a slow intro, get our listeners on board, let them wake up, let them have kind of relax a little bit, and then we can dive into the meat of the program. But first, it's a little fun fluff at the top of the show, Andrew. I know this is your first show, but just follow along with me. I'll lead you to a good place.
Lobster, though, still cheap here. We're still putting lobster on pizza and not caring.
There we go. And also joining us today, beaming in, not as far as the great state of Maine, but all the way in from St. Charles, Illinois. He is none other than the man himself, good old Uncle Mike Tusaw, joining us from the good graces of the offices of Reliance Capital Markets. You know him, you love him. Uncle Mike Tusaw from RCM. Uncle Mike, welcome back to the program, sir.
Always excited to be here, especially on a day that I just got long a bunch of lobster futures. Now, it's good news to hear that.
There you go. Took you long enough. We've been hinting at it on the show for many, many months now.
I've been shorting the puts. I finally got assigned on my lobster futures.
Yeah, this would be the time. This would be the time for sure. I would actually probably make that market myself in lobster futures. I think I could make some money doing that.
So you're on the other side of my trade, huh?
Actually, no. I think seasonality. It's one year down. I wonder what the warmer weather. I don't know. Actually, it's not that warm. We just have a warm day, but.
Well, a couple months ago, I had an intermarket spread going. I was short lobsters, long turkey, but then Thanksgiving really screwed me up.
It blew up in your face.
Combine that with the pumpkin futures, and I'm really messed up. I tell you,
those seasonal spreads will come back to bite you, sir. You got to watch those. I've been saying that. How many years have I been telling you that now, Tucson? You just don't listen to me.
I don't know.
I'll tell you, not everything is a good pairs trade.
You insist on getting long pumpkins right before the end of October. And I keep telling you that's pretty much a no-brainer, but you don't listen to me.
I'm trying to ride the momentum.
This is the year you keep saying to me, pumpkins all year round.
There we go.
Of course, last but certainly not least, joining us from the confines of Options Express here in sunny but not quite warm Chicago, good old Alex Jacobson, the man holding down the fort over there at the Idea Hub. Alex, welcome to the program, sir.
Hey guys, there are no lobster futures on the Idea Hub, but pretty much everything else is out there.
Well, that's an oversight, sir. We'll have to get the product development team on that right away. Luckily, we have Andrew on the program, one of the foremost experts, so he can be a consultant on that initiative for you.
Cool. Looking forward to it.
All right, and with the team assembled, it is time to dive into the heart of our little program, also known as the Trading Block.
The Trading Block.
All right, and those bells mean it's time for the Trading Block. This is what Andrew euphemistically refers to as the meat of the show. We're getting into the heart of it now. So this is where all you listeners who were itching to go, now here is your chance. And of course, as Andrew alluded to, it was a bit of a mixed bag on the old street today. Interesting stuff going on. Most of the major indices really closing fractionally up or down, not too much net broad movement. Saw a little bit of vol creeping back into the marketplace, with the VIX cash sneaking up a little bit, up about a little over 1% on the day. The bulk of that really due to the pronounced sell-off we saw coming in on the old fruit company. Here I was thinking we would have a day where we could actually avoid talking about Apple. But apparently it is not to be the case, as Apple is pretty much the one resounding bit of news to really go on in the marketplace. And there are a couple of interesting things about this that really caught my eye today. One is, of course, the pronounced sell-off off the news that iPhone demand is they're scaling back a little bit in the face of iPhone demand that was a little bit probably slower than they might have expected or wanted. So that, of course, hitting the stock quite a bit, closing off about 3.5% to 501.75 on the day today, hitting an 11-month low. It hasn't been down in these levels for quite some time. But I think what's interesting about that, too, is it showed the overall resilience of the market, I think, because even this blue chip of blue chip, this index unto itself, Apple, that can have a bad day, a very bad day, and yet the market itself still struggled to rally for the most part, which I thought was an interesting development. So once you got outside of the maelstrom that was Apple and some of the bad news surrounding that, there really was a lot of decent news throughout the marketplace as a whole. In fact, I was looking at some numbers today. Granted, we're still pretty early in earnings season, but so far 80% of the S&P 500 companies that have reported have beat their estimates. So from an earnings outlook, it's been a fairly good season. I think some of that is the reason why the market tended to shrug off this otherwise somewhat alarming news we're seeing coming out of Apple. You know, everyone uses Apple as their bellwether these days. Where goes Apple, there goes the rest of the marketplace. Uncle Mike, I guess you were at the 510 level when last we spoke. Is that still the case?
Yeah, still short the 510 puts. I'm hedged at 480 for now. I'm not going to roll down yet. I think that I want to see us close below 500 before I start to take other steps to manage the risk on it. There was a lot of premium with which we collected on the 510 level. So I think for now, I feel very comfortable at these levels, even with a 3.5% drop in the stock today. It did hold 500, and then tomorrow, if we start to get in the 490s, I will quickly change my tune, no doubt about that. But for now, I feel very comfortable with it. If I can just skate by, so to speak, these next few days. Next month, I'm really excited about the higher premium that's going on. I got to get through earnings on Apple tomorrow on the 15th. And if I can get through that, then I think I'll be okay.
I think you need to fire those birdies you have working for you, sir.
Oh, I got those birdies messing me up again on the earnings date, huh?
Just rent out my birdie network when you need it, and I will happily lend them.
23rd.
Yeah, that's the Mark likes to mess with me about Apple earnings, so I just keep saying the wrong dates and messing with him back.
Good
so.
old
You know
Andrew.
what? The worst part is that I should know that by now, because you guys done like 5 times in a row.
It is your first show, as I keep saying today. I think you're a little
like they said in Bugs Bunny. What a maroon!
You need to go back to bed and start over, sir. And you'll catch on sooner or later. Once you start doing the show a few times, you'll get the hang of how this whole thing works.
You know what? I've been looking at the screen all day. Sebastian's not here today. I'm just my eyes are tired. My eye is tired, I should say, the one that works.
Now, was I the only one who was really surprised at the overall level of resilience? Usually bad news from Apple spells a catastrophe for the market as a whole. Yet even the NASDAQ, not selling off too aggressively today really showed some strength in the teeth of all this news. Were you guys as surprised about that as I was?
Well, I personally was not that surprised from it because of the fact that Apple's still down from 700. And with that big of a drop, the market has not reflected that much of a drop with Apple bringing it down. So I think that this shows the resiliency of this market because, as you say, because Apple's like an index of itself these days because of how much of the NASDAQ with which it takes up, this market's been showing a lot of resistance for a while. A lot of the money the financials have been a big rallying point of it.
Yeah,
and
huge.
Apple holding everything back, so to speak. What's going to be interesting is because we're so close to the 2012 highs right now, what's going to be interesting is if Apple does turn around, let's say they do have good earnings next week on the 23rd when they're supposed to have earnings, if money just simply shifts from financials to Apple, or if Apple creates a pretty big rally in the marketplace. Because right now, Apple seems to be very content on holding the 500 levels until tomorrow when I'm totally wrong with things, we'll say.
Yeah, it dipped down to, I believe, about 498 today, but that was about as low as it got. You have that strong psychological support there, that 500 level. If it really gets dramatically south of that, it'll be interesting to see what happens next, where the next support really is, because that 500 level has just been crucial for so long out there now. And now that it's really starting to test it for the first time, it'll be interesting to see how that holds up. Or if we break through 500, who knows where the next level is? Is it talking mid 400s? Are we gapping even lower? That'll be interesing to see.
We have like $100 in cash.
Yeah, there is a floor there. I know where you're getting. We have a ways to go before we get to that floor. But yeah, it is a substantial amount of cash. They burned some of that on some of these deals and production, deals they've set up of late. But still, there is a substantial amount of cash. I think we have a ways to go before we hit that cash floor, that quite literal cash floor in this case, for Apple.
And they do still make money. I mean, I think everybody forgets a little bit about Apple. Even when the earnings are bad, they're still growing at 30% a year, or something like that. Okay, they didn't grow at 45; they grew at 35, something like that.
Doesn't matter. That zealot-like love is a double-edged sword. You ride it up and then you ride it back down. People, when they get disappointed pretty hard, even if their expectations are absurd and overwrought to begin with. It doesn't matter. Disappointment is still disappointment. So people are.
They do. Hey, listen. That's how it goes. It's almost like you're the supermarket checkout stand chick. All of a sudden, once they leave that cover of the magazine, they're done forever. You'll never see them back again.
Yeah, they need that attention. Apple's been very much that. I like that analogy, the supermarket tabloid. It is very much. I
was trying to work Kim Kardashian in to boost your ratings a little more.
There we go. The Kim Kardashian effect is what we'll call this episode.
The Kim Kardashian effect.
There we go.
That would be huge.
We'll get links from people. We'll get links from us weekly. It's going to be huge. It's going to be the biggest episode we've ever done by far. But
400 million downloads.
Apple certainly has a bit of that effect to it. Where I see people discussing it all the time who really, magazines like Fortune and others have created online blogs that are really just Apple blogs. That's all they talk about. So it's really just become this ecosystem unto itself. So it'll be interesting to see that if the zealots turn against it, it loses some of its fad status if all these other things kind of tend to. Because you're right, it still makes money. It still makes a great deal of money. They have a great deal of cash. From a fundamental standpoint, it's a very strong and healthy company.
100 million customers that.
Apple's been beyond fundamentals for a long time. There's other things at play there, and they can be both very strong, as we saw, carrying it all the way up to 700 on an aggressive up run for several years, and now perhaps seeing the double edge of that sword now. Who knows? Perhaps the zealots will turn around again. Maybe that oft-rumored Apple Watch will finally be the thing that turns it all around.
I'll tell you, they come up with some kind of new product all of a sudden, though, it's going to catch everybody a little flat-footed. they come up with any kind of hit, anything again. If they redo cable TV or they come up with something just to do the end around like they did the last time. There's going to be some surprise people out there in Apple land.
I think
$500, I mean, for the companies, what does it generate? Like $50 a share. So, I mean, from a fundamental point, we always poo-poo the fundamentals, but ultimately it's not a very expensive company, given the pretty dramatic growth they have. But
yeah, the surprise here would see them buying bandwidth. That's the off-rumored, on-again, off-again deal. And that's the Apple TV issue, bringing it directly to the home. So it would be interesting because you got a couple bandwidth companies in play. Would be interesting
they should
to
just
see.
buy Dish, something like that,
Yeah, a play like that would be really interesting. By the way, if you're watching After Hours, they're killing Lululemon, and it warned that it's going to miss. And they've taken it down around 5 points here After Hours.
Lululemon, a perennial player, featurey guest, I should say, of the Odd Block. We talked about it many times, and you're right, Alex. They're not exactly faring too well. They're up about $1.50, up about 2% today during the trading session, but now closing at 72.30. But now in the after hours, they are getting crushed down about 5 handles, and looks like they're heading even south from there, trading about 67 right now in the after hours. So not a lot of love for Lululemon. I always get people writing in saying whenever I call it a manufacturer of women's athletic apparel, that seems to be their primary thing, but apparently they make men's stuff too. People have always written, and they make men's stuff too. So therefore, I will acknowledge that, yes, they make unisex athletic apparel. But yes, this manufacturer of athletic apparel and other things, really, yoga mats, whatnot, all that fun stuff, not exactly lighting up the tape tonight. Post earnings. We'll keep an eye on this one. Anything else catch anyone's eye aside from the mighty Apple? I can hear all the Apple haters out there in the audience right now saying, God, no more Apple. So what else do you guys have that really caught your eye aside from the fruit company?
How about the crazy Facebook juice? Dell, I mean, we're talking about intrinsic value. I mean, Dell's kind of trading near it. So somebody might buy Dell out. Michael Dell might buy his own company out.
Yeah, he almost has the cash to probably do it right now.
Yeah.
Probably.
And you know what? That's what's going to make the deal hard because the cash is all offshore. So repatriating it is going to be a big hit. So, yeah, the potential play there, is his own private equity firm to do it. But market liked it today. Moved Dell up, 12.
Dell gapping
15,
up, yeah.
Yeah, 15%. So, yep, did well today.
Was that on the news that he might possible buyout? Here we go. So he might do it himself then. Interesting.
Yeah, the journal played it out 3 ways, and it talked about the fact that it could be a problem for a private equity firm because so much of the cash has to be repatriated, and I'm no tax
expert. That's the lobby to change the laws.
Yeah, that's not going to happen in this environment.
That's true.
Now this is a hard one to wrap your head around. Dell here. It's been a strange beast. They've gotten into the commodity end of the consumer electronics business. That's not exactly a desirable place to be. Everyone has seen from the Apple, not to get into Apple again, but Apple has shown that consumer electronics is really where the money is, and the high end of that to really make some money. Dell's really been on the low end, the commodity end, PCs for $500. I mean, we just bought a bunch of new PCs at the end of last year for our offices here, and looking at HP and Dell and some of these others, the prices you can buy what essentially would have been a supercomputer just a few years ago is absurd. You can get a fantastic smoking machine for under $2,000. For $500 you can get a very, very competent machine. So the margins there are really, really razor thin. So, and Dell has struggled to get out from under that for a long time. They've tried phones. They had their Dell Streak. They had the first really phablet phone before Samsung knocked it out of the park with their Galaxy Note. Dell had the Streak that, if you remember, everyone pretty much universally poo-pooed, and it didn't sell at all, and they got rid of it, and it was the first 5-inch phone. They've done a lot of things, like they tried to have MP3 players. They've tried to get into the consumer electronics brand before, or the consumer electronics market before, with very limited success. It'd be interesting to see if Dell does buy his own company, or someone else brings them in-house as a private equity buy, what they can do to really turn around this business. I don't know. Do you think Dell, what can you do to turn around Dell at this point, unless you really get away from the commodity end of the business? But that's what they're known for. Is Dell known for high-end consumer electronics gear? I don't know. I mean, would you really want to come in and buy, I don't know, a Dell I don't know, Dell. Maybe they go back to the phone market, Dell phone. Who knows? They tried that once, didn't work. Maybe they do it better this time. But you're right, a lot of volume going on out here in Dell. We're seeing about 200,000 contracts lighting up the tape today.
Caused a little pop in Microsoft too for a short while.
Yeah, looks like 22,000 of those were not surprisingly upside calls, Feb 13s, and 14,000 of the Feb 12s. So a lot of love in the calls. And a lot of long net deltas, buying about 42,000 net deltas. So not surprisingly, you see a stock gap up 13%. People are loading up on upside calls. That's about what you'd expect in something like that. But still, interesting stuff for Dell. This is an interesting one to watch. Maybe this will give some life back to the stock. It might actually be a viable trading candidate again. When was the last time you talked about Dell with any real interest? I know I certainly haven't in a long time.
No, it just kind of kept ratcheting down.
Exactly. Go ahead, Alex.
For what it's worth, in the late 90s, they were one of the biggest clients of the SCHW because they were one of those firms that did the big corporate put sale. And back then, there was a no action letter. It was tax-free. And every couple of weeks, you'd get a call from a reporter and say, what is all this activity in Dell? And you'd say, well, understand the way it works. If they're selling the puts on their own company, and the puts expire, it's a balance sheet item. It's not an income statement item. It's tax-free. And in the 90s, Dell, Microsoft, all those people just sold tonnage. And, of course, it worked really well for a while. And if you dug down into the annual reports of Dell, there were quarters they were making more money off the options than they were selling computers and servers. And then, everybody in the options industry said the same thing. What happens when the stock goes down? And it did, and it stopped. But they were just huge size. I mean, hundreds of thousands of contracts short on their own company in the mid to late 90s.
Yeah, not a strategy you've seen employed to very great effect since those days. Of course, Dell has a bit of an interesting history in the options market as a whole. They were, of course, one of the first real pits to come onto the SCHW post multiple listing. I can still recall the stories of the fist fights of guys trying to get out to Dell and how the crowd was enormous out there. And that was really one of the first real bellwether equities that I can recall. Other ones then followed suit. We had AOL, Yahoo, Intel, where I went out to. But yeah, Dell was really just one of the first really, oh wow, there's gold in them there hills from an equity perspective when that stuff started hitting. That was probably around 99, I think, maybe early 2000.
It was single list on the Philly, and then it went dual, and it was Lee Tenzer and his group. And I think within a week or 10 days, it had gone from obviously 100% on it, almost 60% on the SCHW. In fact, I was in Michael Dell's office when we listed it. I was down there for the SCHW because we were trying to get him to come up and ring the bell. And he sort of didn't want to draw attention to where it traded. And again, this had to do with all the puts he was selling. But I remember coming home from Texas with a suitcase full of Dell hats. But it quickly moved to the SCHW, and that back then that was really commentary on the SCHW technology versus the Philly technology and the trading talent.
Yeah, SCHW had the deep pool of liquidity. SCHW had Raise, which at the time was great before the Raise bandits really ruined it. And there was a lot of people, crowds were literally fighting. And that was the days of sleeping over at the exchange. I did that once or twice myself. Not exactly a fond memory, but that's what happened. When you wanted to get a primo spot, that was the price you paid. So yeah, Dell, definitely one of those names where Dell, Andrew, were you down there in the late 90s when all the kind of equity furor really took off?
Oh, yeah. I was on the SCHW from 91 to 97, and then I was on the PCOS from October 97 to 96, and I was on the PCOS prior to my SCHW time. So I was on the SCHW, yes, from basically the market was dead until about mid-93, and then it started getting real fun from like 94, 5, 6, 7, 8, 9, 10.
Yeah, those were indeed heady days, as you like to say. Of course, you were on the PICO, so you saw a lot of those tech names before we got them over there at the SCHW.
Exactly. And they held on. We had still had pretty decent piece of volume as well. So there was enough going on there.
Yeah, it was group one was the hammer on the coast. And the first battle stock was Micron. And it was the same thing with Dell. All of a sudden, things became multiple. Spreads got tighter. Size got bigger. Customers benefited. But you really got to, at that point, see the difference between the exchange technologies. If you remember, if you go back into the 90s, there was a deal to merge both the P-Coast and the SCHW. And the deal was announced, and shirts were made. I have one sitting on my chair. Big party in New York City, and the next morning the deal was off. So go figure.
The heady days of exchange competition. I will just say this, thinking back to the days of the late 90s and all the dot-com madness that was going on, not just from an options perspective, but still to this day, one of the saddest and perhaps scariest and or saddest, a little bit of both, perhaps, moments I can think of going back to that. Wasn't specific to options, but it was more, if any of you have seen that documentary that came out at that time, there was one called Startup.com, and it got into all those crazy .com startups and how insane they were at the time. But forget the movie as a whole, but there's one scene where one of the guys is on CNBC, and as he's talking, you could just see the ticker going by underneath them. And if you want to just let a tear come to your eye, look at some of those stock prices that are going on underneath that guy's name as he's talking. Sun, I think, many hundreds of dollars. Dell, hundreds. AOL, Yahoo, 400. It was just, it's enough to bring a tear to your eye even to today, just thinking of those valuation levels and how absurd it all was. And of course, the resulting cacophony that happened over there, the SIBO and in the options market, as everyone tried to get a piece of that for themselves. It were indeed heady days to be down there. Fun stuff. But I think with that notion of the .com explosion and then implosion, I think we'll wrap up the old trading block for today and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and or unusual options activity that was lighting up the old tape today. It's a perfect segue lead-in from the discussion of the madhouse days of the late 90s and some of the trades we saw going up today. As we are wont to do in this segment, of course, we encourage all of you out there in the listening audience to play the home game and surf on over to theoptionsinsider.com, where you can find all of these alerts and many more. Many of them contributed by our own Andrew Giovinazzi. And Andrew, I'm looking over here at theoptionsinsider.com, and the first one that's really catching my eye is just this fantastic name, Telefonaktiebolaget LM Ericsson. Let's get into that. That definitely gets name of the day, if nothing else.
Just known as Ericsson.
Yes, but you got to say the full name just for fun.
Well, I like to put, all the information out there as I find it. Ericsson.
Yes, just keep our listeners and our readers informed.
Yes, so it was good. ERIC is the symbol for everybody looking. This is, again, I'm seeing, it was weird, like, some days you see there's just, like, pattern of, like, big size going down. Today was kind of like the protection buy right day. I don't know what the deal was, but that's kind of what it felt like for individual name volume.
Apple spooked everybody. You got to load up on protection today.
Or hedge. I think that in some way. So Ericsson basically trading very close to the 52-week high, which is probably one of the few kind of technology. They make kind of handsets and stuff, don't they, Ericsson? Maybe small.
Yeah, they used to have some deal with Sony. Now I think they're their own deal, or Sony bought up their part of Ericsson, but Ericsson still exists. I've never been entirely sure how that deal worked out, or who got what in that deal. But apparently there is still Ericsson, and there's also the Sony Ericsson that they've kind of just folded into themselves. Is that not it?
Yeah, I believe it's some, because they have pretty varied businesses, a pretty low volatility stock. But nonetheless, I will start with average contract volume is 1,539 contracts per day. So it doesn't trade huge, but when volume like this goes up, you had 3,861 contracts on the Feb 10 puts for 30 cents. So it was, blocks of scattered like 80, 90. And it's funny because it almost feels like there's a newsletter writer, right? He says, Ericsson is going to heck in a handbasket, so buy a bunch of puts. So scattered puts drove the volatility up only, 1.9 points in February. It looks like a basically hedge in an earnings trade. That's how I see that. Now, don't forget when I print this, these are like the volume at the time. So yeah, so 4,000 on the day for, that strike, right, of the Feb 10 put strike?
Yeah, about 38, nearly 3,900 total on the day. So yes, maybe some newsletter came out and said, hey, lock in your. How many newsletters can make money though? I mean, there's so little volume on Ericsson. There's probably some big institutional guy who's hedging his position because how many newsletter subscribers are out there holding positions in Ericsson they need to hedge?
Yeah, and there was no open interest, just 557 contracts open interest. So, this is it sounds like somebody that's been long some stock and they're just maybe from $8 or whatnot, and they're hedging.
Maybe they financed it with all those Jan 10 calls too.
I didn't have the Jan 10 calls when I saw this.
Of course, there's 5,000 open there. They did 1,700 today. I don't see the exact price that they went up, or if it was opening. But there you go. Maybe it was they're legging into a 1x2 time spread, sir.
Now here's another one in Schwab. I like the Schwab trade. Schwab was trading down 9 cents to 15.31. Here's another stock, like a bunch, on its 52-week highs. There's a lot of names trading at 52-week highs. Well, no surprise since the market's at a 52-week high. Should make sense. I just did, it was like one of the Apple moments I just had there with the Apple earnings day. But anyway, it's like, how does Tucson not know the Apple's earnings day? I was just making myself
a long-standing joke, sir.
Apparently, that I just keep missing. All right, so what's happening? So Schwab, this morning, I had pretty large volume, about 15,000 contracts trade on the Jan 15 strike. So this is kind of a weird one because they basically just crushed these calls, very close to parity. I mean, they were trading for 45 and 40 cents, only dime 15 cents over parity. And 15,000 contracts. Usually the contract volume is only 1,800 for Schwab, a little over 1,800. But there was 15,000 contracts open on this strike. So it looks like somebody's just closing. Like they were long, wrote them up for nothing, and they were just basically giving up and closing right now.
Yeah, and they're taking it off before earnings, too. Earnings are a couple of days before they open on the 16th.
So
you think they'd want that position, but apparently not.
I don't know if the third quarter volume was that bad overall. So you would think they kind of want to keep it on, maybe backspread the position, but they just blew them out, it feels like. So, which might not be great for Schwab earnings.
I'm guessing if you're thinking the best is yet to come, you might hold on to a few of those.
Right. So that'd be I would check on open interest tomorrow on there. It's very, very that was curious to me. Let's just put it that way. It did crush the volatility very, very hard though. Volatility down 7 whole points in January. So pretty much, if you were a market maker and you bought all those calls for, 15 cents over parity, you have back spreads to go. You're hoping for a fiscal crisis at that point because you'd be doing very, very well. And let's see here, we got the Schwabi. The pet one was okay. I think that's another one of those newsletter guys. But another one here is just an oddball. This is real oddball. Sealed Air Corp. Again, this stock trading $2 off its 52-week highs, but it was trading as low as 11 and change over the last year. Basically, what I think this is just a guy writing calls. He's long the stock. He sells the 17.5 strikes. So what happened was block of 1,148 of the Sealed Air April 17.5 calls go up for 145. The strike did trade over 2,000 contracts for 150 and 155. Average contract volume is light for 700 contracts. But the open interest on the strike is heavy. So, I think this is the case of some guy just owns a stock and writes a semi-in-the-money call, and they're just happy with their, X percent per year on this one. So this looks like a classic buy-right strategy to me. Volatility did go down after the sale in April. And the fact that they sold April is kind of a more quarterly type sale, which kind of smells like buy right.
Yeah, this reeks of some guy looking to juice a little extra dividend on it. The 30 vol, it's not a bad little gain. He's doing a little bit in the money, getting a little bit of juice on these puts. Overall, not a bad trade, not a bad way to generate an additional dividend. We're going to talk about generating your own dividends in a minute in the mail block, but interesting way to see how some people do it, and this is one interesting way to do that.
So this is people using options. It would probably make Alex happier. Seems like more intelligent. I didn't see any real good old-fashioned out-of-the-money call buyers. That's the one thing, when we're trading like in the late 1990s again. You can actually buy out-of-the-money calls and make money because you blink and they're like $5 higher. Oh, wait a minute. I didn't even fill that paper out, and I'm hedging the stock $4 higher.
Those days are woefully behind us, sir.
They are woefully behind us, but they could come back. If we could do $18 billion of inflows every week into the market. Maybe we'll see those days again.
There you go. Upside call buying. Andrew called it, listeners. Go out and load up on some 5 Delta calls. And then call Andrew and see how that works out for you.
Exactly. And then say, Andrew, you're an idiot for making me buy those calls.
All right. Thank you, Andrew. Those are some good ones. I like the Sealed Air Corp. That's an interesting one. That's a good odd block special there. Nice little unknown name, $18 name, doing some interesting activity. Good one to keep an eye on here. We'll keep an eye on that one going forward. Might be a good candidate for some future odd blocking. But with that, we're going to close out the old odd block for today and dive right into the Express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that theme music means it's time for the Express Block, the portion of the show where we rouse Alex from his slumber and we get to peer deep behind the curtain of what's going on over in the land of OX. Alex, what has caught your eye? What do you have for our dear listeners today?
Couple of things going on, and again, pulling this from the Idea Hub, the marchers have gone up this week. This is the week where we flip and bring the marchers in. So we're seeing a lot of Russell, and obviously its ETF, the IWM, up there. But an interesting observation, because the Idea Hub also looks at non-index ETFs, so it looks at things like gold and silver. And one real interesting observation is gold. The GLD is now trading volatility about the same as the SPX and half the vol of silver. So to some of the metal buffs out there, that's unusual to see silver being twice the vol of gold. And gold is just quiet. I mean, it's trading about the same vol as the Spider or the SPX. Facebook held 31 until after hours, and then they beat it up a little bit after hours, dropping it below the 31 level. And other than that, what's going on is weeklies. Weeklies continue to be popular on the desk and with customers, and I know we've all talked about this, but now having the 5-week cycle, we're working to build out more weekly ideas into the hub. And on OX Social today, the 3 big names talked up were Apple, Amazon, and Google. Apple and Google got beat up, but Amazon did real well today.
You know, it's interesting you mentioned the indices, because you said for a while how the equities were really stealing the thunder from a vol perspective, and that certainly is still the case. It is interesting to see just how, I suppose you can say, diminished from a vol perspective GLD really has become, because you're at 12 vol for gold. Uncle Mike, does that make you want to start leaning more in the premium buying direction again?
I'm still there. I still haven't sold anything in a while. I still just have the February 160 calls as my hedge right now. The upside's open because I paid like $1.50 for that thing 2 years ago, I think.
There you go, just sitting on all that upside there. But yeah, silver, quite the beast. You've been active out in SLV again?
Yeah, I've been trying to sell puts to get back into that one. I'm short the 2950 puts that expire in a couple days, so I'm actually hoping it comes down a little bit. I'd like to get back into it because I'd prefer not to chase it, but silver as a whole, I want to be back in it and just selling premium, waiting for it to come down, and it's come down, but need to get into it. So these next few days, going to be doing some silver maneuvering, I'm guessing.
Silver maneuvering. I like the sound of that. All right. Thank you, Mike.
Advanced term.
Yes. Thank you, Mike. Thank you, Alex. And that's going to do it for the Express Block. And now we're going to dive into a real quick mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
Welcome to the mail block. This is, of course, where you, the listener, get your chance to sound off. First off, we have a good one here. Andrew, you'll like this. You may have heard on the last show.
Apple's had earnings, guys. They reported.
Oh, no. My birdies have failed me yet again. Andrew, if you listened to the last show.
No way, really?
All right. Andrew, if you listened to the last show, you'll know that your cohort, your partner in crime, good old Mr. Seabass, went on quite at length about the differences in the shiny versus dull side of aluminum foil, as our British listeners say, aluminium foil. And we got a lot of people writing in saying he was crazy. Of course, I kind of fall into that camp on a regular basis, but I do agree with the listeners on this sense that it was indeed Seabass was smoking a little bit of something. Someone wrote in there a tweet from Money Hat saying, Seabass is crazy. There is no difference between the shiny and the dull sides of tinfoil. That's just an old wives' tale. For all of our listeners who were concerned about that, check out the FAQ on Reynolds.com. They'll debunk you of that notion as well. So there you go, Mr. Seabass, putting out some misinformation for all of our listeners there. That really caused...
I did like the way you guys got into that, though. But also there's the non-stick foil. There is that non-sticky side, though.
Yes, but the Reynolds FAQ says even in that case, Mr. Sebastian had it backwards because you're supposed to use the dull side. That's where the non-stick is, not the shiny side. So even if you believe him, he's still wrong on the non-stick. So he just blew a lot of people's mind with that tinfoil fact, and so we had to
the options.
Exactly.
And less on the tinfoil.
Less home economics, more options talk, and we're all set.
Does this explain why Seabass's tinfoil helmet has not been working?
Exactly. His protection.
He has it on backwards.
His protection in the land of the bizarre and the, shall we say, cynical, or not cynical, skeptical, what's the word I'm looking for? The crazy.
The
land of the crazy has not exactly been functioning. One other good email here we got one from Paul in Venice, Florida, not Venice, Italy. He says, can I sell covered calls on a convertible preferred stock, in particular this BAC.PR.L, which is a convertible name on Bank of America. I chose this name because it pays roughly 9% dividend yield, but I would like to augment that income stream if possible. Thank you for your insight and for your informative and surprisingly entertaining program. I didn't know I could have such a good time learning about options trading. Happy we could help you out there, Mr. Paul. And this is one of the reasons people like these preferred stocks, so they get these dividend yields. But now you're starting to see the downside of these names is that this Bank of America trading about $11.50 today, this is preferred trading about $15, and there are no options listed on it, particularly for this obscure one. It's hard to even find a quote on it. So you get this 9% yield, but that's kind of in return for this lack of liquidity, certainly on the options side. 9%, that's a good dividend yield, but you do some quick math, you can easily replicate that in the listed. Just look at the front month. I believe I pulled up when I was talking to Paul here on email, February calls, and you could just write those, the at-the-money calls, and generate a roughly 3% yield in a month, and of course multiply that by a full year, and you're doing fairly well with a listed liquid contract and not one of these obscure nonsense names. Andrew, Uncle Mike, you guys have anything to add to this?
So let's separate out two concepts, and Andrew was making this concept, and I think he got sort of run over when he was saying this.
I did get run over. No, I did. Just let you know. You're right, Alex.
So if it's a convertible preferred, if it's convertible into common, it has a delta, and you can, in fact, write covered calls against it. Now I'm going to give you a 3-minute disclaimer. They're generally not convertible into 100 shares, so you may need to own multiple bonds to actually get a round lot sold. Not every brokerage house will pick it up. So sometimes there needs to be manual accounting for this, so that I started my career at Merrill Lynch, and I worked with a guy who did just this. He wrote covered against convertible prefers, And the margin people, who then were in the actual back of the office, just hated him because they had to calculate all these things manually. But the way to do it, an easy way to do this, is do this in a portfolio margin account. If the listener who wrote the question has enough assets for a portfolio margin account, he can calculate the deltas himself. He can write the calls, and it does juice the return a little bit. One anecdotal story is there's a guy in Chicago who runs a little hedge fund by the name of Ken Griffith, who's worth many billions of dollars. And he began his career trading from his college dorm room, doing something similar. He would essentially arb the convert versus the option. And that was his strategy of choice to start with. And he's a billionaire. So It's very hard to fault any strategy that a billionaire used to start his career on the street.
I used to actually use these when I was trading biotechs in the early 90s, because some of the notes, they actually traded so far underwater because they traded in two separate markets. I mean, this was the NASDAQ, circa 1990, 91, where, you could really buy these things for, basically below intrinsic value and hedge your, instead of just buying underlying to hedge whatever I wanted to do, I would buy these. So can you use them? Yes, you can. You have to do some homework. You got to figure out the delta, strike price, how long you're going to own it. Figure if there is some intrinsic value, so you can kind of dial in on what type of option you want to sell for these things. But after you do that, you have something you could write calls against.
That's true. There is some, obviously they are convertible, so there is a delta. I was talking to this guy by email a little bit, looking at his questions, and from talking back and forth with him, it didn't seem like he was, that might have been a little bit beyond his options knowledge at the time, which is why I did not recommend that for him. But you're right, Alex, you can't do it.
That's optionpit.com.
There you go, optionpit.com to write you on calls on your convertibles. But Alex, that's a great point, and it is doable. It does take a lot of work. You have to find a brokerage firm that will allow you to do it. You have to do a lot of the calculations and the keeping a track of it yourself. Always fun when you have multiple accounts that don't offset each other directly at the same brokerage firm. But c'est la vie. It can be done. So if you really, really want to have that preferred over the listed common and you want to write the calls on it, it can be done if you're willing to do the extra legwork. And speaking of legwork, we're going to have to close out this mailbag for this week. And now we're going to dive right into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, a portion of the show where we look at what's ahead for the rest of the week from an options and from a trading perspective. And Mr. Andrew, what is catching your eye for the rest of this week, sir?
For the rest of the week, VIX settles Wednesday. So we've got some positions on an option pit. We'll see where that kind of goes. I think we took most of it off today, but we got a couple of wild cards. Seeing if it actually break down below the 13 level. There's more coming out on Facebook. We've got a lot more earnings, big earnings the next 2 weeks. So that's really what, we're kind of watching. And just trying to unwind some positions. Got some short gamma stuff on. So getting out of that stuff, looking forward to what they're going to screw around with the deficit talks now. That'll be the next place we go.
All right, thank you for that, Andrew. And now turning our gaze away from the East Coast and towards the lovely lands of St. Charles, Illinois. Uncle Mike, what is catching your eye for the rest of this week, sir?
Well, Apple earnings tomorrow. No, just kidding.
But of course.
It's definitely Apple, obviously. It's tinkering around that 500 level, so it's definitely spending a lot of time looking at that. Waiting for gold to do something. It is like watching paint dry, and I was kind of curious to see if Ford's going to be pulling back anytime soon. They had some good news out recently, a week and a half ago, I believe it was, and they're tinkering around the 14 level. Curious to see if our beloved Ford will come back. I'd love to kind of get back into it and start playing it again.
You, of course, knew it was going to come back when I finally collared it off around the 12 handle. So that was your key to triple down, sir, and pick up some forward. In my deeply cynical viewpoint. No, that was a good one. That stock has been banding from that 9 to 12 level for so long, I've lost track of how many times it's done that dance. So it's nice to see it breaking out of that range, maybe get a little bit of something else to look forward to going further with Ford. And last but certainly not least, Alex, what are you watching for the rest of this week, sir?
Earnings. And as Andrew pointed out, it's all the major financials except Wells Fargo, Bank of America, Citi, JP Morgan, Morgan Stanley, U.S. Bank Corp. And we'll be watching Washington while we've been taping this. I've been watching the TV after hours, and there's Bernanke's been on, and President Obama's been on, and obviously the focus is going to be on Washington for the next couple of weeks. The webinar crew is in Minneapolis on the 26th and Dallas on February 9th, and both of those now are simulcast, so that if you can't make it to the actual location, you can come to the site, log on, and actually see the webinar simulcast. So if you can't make it out there, you can do it on your computer.
All right, thank you for that, Alex. And of course, a last check back in here on good old Lululemon. It appears to have settled in around that 67 handle. So off about 5 handles from where it closed today. Not a lot of love for Lulu, it seems. In the after hours, we'll have to wait and see, of course, where it opens up tomorrow to see all you options traders how you fared. But not a lot of love for that one right now in the after hours, and certainly a lot of other earnings to keep an eye on for the rest of this week. But as for the rest of this show, that's going to do it. Unfortunately, that was our final segment. But before we go, I like to check in with all of my cohorts here, my partners in crime on the Option Block All-Star panel, to see what's catching their eye and what they have in store for you, the listener. Starting off with you, Mr. Andrew, what is coming up in the land of OptionPit.com?
The land of the pit is, you know what? I have really no idea. I know it sounds horrible, but we have not gotten our schedule for 2013 settled yet. So we have, again, pit reports every day. If you want to come in, and if you like the way Mark and I yak, we actually do that live under live market conditions, putting trades on at our daily pit report. I encourage you all to tune in for that every day at 11:15 or 1:15 Eastern Time.
All right. Thank you for that, sir. And Mr. Alex, I know you guys are headed off to the snowy north of Minneapolis. What else is on the agenda for OX in the coming weeks?
There's a full webinar schedule, and as I say, the crew is back out to Minneapolis and Dallas, and just be aware of earnings coming up.
Thank you for that, sir. And last but certainly not least, Uncle Mike, what is coming up in the land of KYO/RCM?
What webinar train's going to be rolling in another couple of weeks. Stay tuned as the weekly webinars and weekly interviews are going to be starting. We're hoping February 4th on the show. The week of February 3rd, we're going to have a lot of new people to bring in, and we're talking with a lot of people, just getting our schedule finalized for Q1. We're excited.
And we're excited as well to see what you have going on, what's cooking on the old webinar train. So look forward to that, listeners. And last but certainly not least, if you'd like to learn more about any of the topics we hit on the old show today, or of course go back and listen to some of our archived episodes, we have quite a few of them now, well over 200 here on the old Option Block. And by all means, you can do that at theoptionsinsider.com. While you're there, please leave a comment, leave a question for us here on the show, and then you too could join us on the mail block, and your fellow listeners can hear what you have to say. And, of course, you can always find other episodes of this program on iTunes, Stitcher, and just about anywhere else you can find your online audio. And before we go, all of us here on the old All-Star panel would like to thank all of you in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.